Welcome to Market Matters. I'm Nadia Hassan together with Khoo, Chuang and Wei Lynn Tang. Wei Lynn's going to talk to us a little bit on Broker's Call. But first, let's talk about companies in the news. It broke this afternoon. I don't know if I heard crying or I heard happiness. I think the happiness probably come from Silk Holdings Bhd because after so many years, finally, there is going to be a toll increase.
That's right, 4 years into the game, and satay munchers beware because the Kajang Silk Highway will go from $1 to $1.80. Okay, and I know some people who work in Kajang, or who live in Kajang but work in KL. They've got to go through 3 or 4, maybe 5 tolls to get to here. Any toll increase is bad news, but when you have a concerted toll increase, because the government did say they're going to raise toll rates across the board by 30% by the end of this year because they can't afford to pay compensation, right?
Yeah, okay.
It's going to be bad news for everybody.
Yeah, exactly. So because the compensation, right, although the figure is actually not publicly told, it's actually about 400 million. I think you had this little piece of news where, according to Deputy Works Minister Dato' Rosna Abdul Rashid, she said it was on to the tune of 558.9 million. Remember, the longer you don't increase toll rates, the longer you have to pay these fellas because ultimately it's a contract. You have to honor your contract.
It's written to the concession.
It's written into the concession, exactly. About the 30%, right, the interesting thing is, I think they said not the North-South Expressway. And I think what roads they actually
and I'm not surprised
went up
because
is very telling.
Yeah, because these are not main arteries you're increasing tolls on, these are just the capillaries, right? If you raise toll roads on the North-South Highway, you are committing political suicide because everybody uses the North-South Highway, right? To get home.
Do you think that we will see a lot of stories tomorrow about people protesting these roads? Because
I think you'll see
I looked at them, you're right.
The internet will go crazy.
I think they already went crazy when the 30% was announced, and it seems to be that this is the way it is. What does it mean? The fact is the government says we cannot pay compensation anymore. Is that a big question
We already
mark?
knew that from a long ago, but what it does mean for shareholders of, say, Silk Holdings, right, is interesting from their perspective because this is obviously going to be very good for their earnings at the bottom line. It will also have interesting repercussions because they've also got an oil and gas services arm. And they've basically got, they got 19 vessels, 2 straight supply vessels, 70 anchor handling tug supply vessels. And with the oil and gas, oil prices also on the rise, this is interesting for Silk, and that's why I think their shareholding was up by 12.5% today to 54 cents.
That was the impressive thing. The minute announced, well, I think EcoVest was another one who also got it. So they also saw a really nice jump in share price. But the thing is, Highway is just one of their businesses. They do themselves admit that oil and gas is the bigger one. So I suppose if you're a Silk shareholder, whatever you feel about toll aside, that is the division that you should be eyeing more on at the moment. I mean, they just recently, the last contract was the end of August. They got a couple of contracts from ExxonMobil, but it's 18 million. It's not exactly the biggest thing ever. Yeah,
this is going to be very good for Silk, but in terms of the national repercussions, basically the government is taking the lesser of the two evils, right? Because if they raise toll rates, they got to pay massive compensation to all the concession holders. But by raising toll rates and incurring the wrath from a political perspective, these are smaller risks that they're taking.
Well, yeah, like we said, the roads that they actually picked,
right.
I said was very, very telling. Yeah. But talking earlier about budget, is it the middle class that's going to feel it? Because these are optional.
I think so. Budget, October 23rd, it's going to be very interesting from a fiscal perspective.
We'll have to see how it goes, but just to bring it all home, the government has finally allowed an increase. I think people at Silk and EcoVest are going hallelujah, up until quite a percentage for some of the highways. Of course, Silk will see a boost in earnings, but let's not forget, the bigger thing for them is actually the oil and gas. We'll have to keep an eye on that. This is just going to be very, very nice for them. But let's not forget, right, even though they will go up in their takings, the compensation they get is dropping. So compensation is almost instantaneous. Takings will be over a while because some people might just stop using your highway.
I'm not sure whether the compensation pays for all the potential profits you can get from highway users, but it is a 37-kilometer highway, right? And it is Kajang, and Kajang is where satay munchers would love to go.
I do now. You've actually just made me hungry, but I don't know about Wei Lynn. After Broker's Call, shall we just go and all get satay?
Some satays.
Yeah, exactly. So what is actually on the docket today?
So for today, we have Mitrajaya Holdings Bhd, and this is brought to you by Kenanga Research. So what happened was last Friday, Mitrajaya announced that its wholly owned subsidiary got a 52 million ringgit contract from East Coast Economic Region Development Council for main infrastructure works at Pahang Technology Park in Gambang, Pahang. So now this contract will be 78 weeks long, completed by April 18, 2017. So Kenanga Research is actually neutral on this contract, and it said that it is actually within its FY 2015 estimated replenishments of about 700 million ringgit. But note that year to date, Mitrajaya has actually secured 282 million ringgit worth of contracts, so it actually makes up 40% of Kenanga's estimates. But Kenanga actually said that its assumption is actually conservative to the management's target, because the management apparently is eyeing a target of 1 billion ringgit by end 2015.
Hold on, just hold it there. How much have they raised so far?
282 million ringgit.
So with 3 months to go, do you think they'll get a
I'm
hold?
not sure. Can you pass the calculator?
Yeah, so hold on. Yeah, I mean, it's a big target.
It's a big target, and we're
Are
talking
you going
about...
to blame them for dreaming big though?
Well, it's 2.5 months away from the year end, and I don't know, because Mitra's tender book, right, mostly is actually in Putrajaya, where it's actually got excellent track record in the past 10 years. And I don't know, news flows coming up the next 2.5 months, I don't know if they can actually achieve 700 million from 282 million ringgit. But that said, in terms of their order book, they currently do have about 1.55 billion ringgit, which can actually last them for the next 2 years. So Kenanga Research actually maintains an outperform call with a target price of 1 ringgit and 63 cent. So this is actually against the closing price of 1 ringgit and 17 cent. A bit of an upside right there. In terms of the company, it's actually not, I mean, it's about 750 million ringgit market cap, right, for Mitrajaya. EPF actually owns about 2.7% in it. So for this contract of 52 million ringgit, assuming a 5% pre-tax margin, so you will see about 1.2 million ringgit per annum that will be actually contributed to Mitra's net profit 27. It's not really too big though, because its annual revenue size in the latest financial year is about 500 million ringgit. Net profits is about 50 million ringgit. So
how do you feel about construction? How do both of you feel about construction sector now?
Well, it's definitely going to be a beneficiary out of Budget 2016. Everybody's talking about a bigger development budget, more roads, more highways, more earthworks, and so, right? And the government's been trying to go that direction. So I will not be surprised, given the fact that most of the jobs on Putrajaya, for these guys to be one of the, if not primary, at least secondary subcontracting benefits.
1 billion though? Do you think they'll reach it?
Well, it depends if the managing director uses Lycra to put on his for his underwear, because he's stretching himself pretty thin.
Yeah, okay. But what are the risks actually when you looked at the report?
So I think for construction, lower than expected margins. There will be some delay in construction works. I mean, as you know, there'll be news flows coming up, but sometimes there's delays. Lower than expected order book replenishment. There could be a risk there. And also for Mitrajaya, they also have actually a property development division, but it actually contributes not as much as a construction division. But I don't know, Mitrajaya as a not too big of a construction firm, I would say it's in terms of PE, it's still quite okay, because the target price of actually 1 ringgit 63 cent implies about PE of 7.3 times, single digit.
Yeah, so what are your main takeaways from all of this?
Right, so Mitrajaya got a 52 million ringgit main infra project for the Pahang Technology Park in Gambang, Pahang. So Kenanga remains to outperform with a target price of 1 ringgit 63 cent, and the counter actually ended the day slightly less than 1% up at 1 ringgit and 17 cent.
All right, thanks a lot for that. And that's all we have for our show this wonderful rainy Monday. Keep your umbrellas happy. I am Nadia Hassan, together with Khoo Chuang, Wei Lynn Tang. If you actually want more news, please go to theedgemarkets.com. You can actually read more about all the stories that we have talked about this afternoon, or pick up a physical copy of The Edge Financial Daily. The weekly just went out last week, so go pick up your copy at all newsstands available, not to sound like an advert. But thanks a lot for that. Thanks for watching. Good night.